Hi, I'm disability lawyer David Brannon. In this video, I'm going to answer the question, what types of income affect your CPP disability payments? After watching this video, you'll have a better idea of the types of income that you may receive that could affect your payments, and if so, what you can do about it. After watching this video, if you like it, please hit that like button. And also don't forget to subscribe and hit the bell notification so you'll get access to our videos every week. We release them on Thursdays. So what type of payments can affect your CPP disability? We get a lot of questions from people that once they're approved for CPP disability, they get worried if they have income coming in from other sources, and they wonder, is this going to affect my CPP payments? Am I going to lose my CPP payments? Would I have to pay something back? First of all, let's start from the starting point here of when can someone qualify for CPP disability? To qualify for CPP disability, you have to meet three criteria: age criteria, the contribution criteria, and the disability criteria. Let's zero in on the disability criteria because that's important for answering this question. So to meet the disability criteria, you must have a physical or mental impairment that prevents you from working on a regular basis in any substantial occupation. It basically means that you're not able to work and earn more than about $5,000 or so a year. When we're looking at what other types of income will affect your disability, really, the definition of disability for CPP focuses on your ability to work and earn income from working. So other types of income should not affect your CPP disability as long as it is not work-related. The other important thing to know about CPP disability is that it is a program that is paid just on disability alone. There's no financial means test. With provincial disability support like ODSP, AISH, or PWD, those types of provincial disability benefits will look at what is your total family income, and if you have a certain family income above a certain amount, they look at all income sources, then you could not qualify for disability, or they could take your disability away. That is not the case with CPP disability. There is no financial means test. So now let's take a look at some different examples of income that may or may not affect your CPP disability payments. So the first category of income that people want to ask about, will it affect my CPP, deals with other disability or support type payments. So we're talking about long-term disability payments, short-term disability payments, EI payments, it could be spousal support payments, or it could just be a pension from work. Nothing to do with disability, it's just a work pension. So can any of these things affect your CPP disability? The answer is no. None of these things are being paid on your ability to work, so they will not affect your CPP disability. It is important to know that having CPP disability might affect those payments. So that's a whole different question, and if you are getting one of those other payments, you might want to look into that. But those payments will not affect the CPP, but the CPP can affect those payments. So the next category of income would be what I call one-time payments. This could be like winning the lottery, getting an inheritance, having some family member gift you a bunch of money or just give you a loan that they don't want to be paid back on, or some type of an injury settlement, something of that nature. A one-time big cash injection, that it's a one-time payment, that's it. Another example might be a severance payment from work. So all of these things are one-time payments and are not related to your ability to work. They're not being paid to you based on your ability to work, so therefore they should not affect your CPP disability. The only one in that list that you may want to be careful about is if you get a severance payment from work. Sometimes these severance payments are paid out into the future and it looks like you're working because you're getting paid every couple of weeks, or they spread the money out. So in those situations, you would just need to clarify with CPP disability that this is a severance payment and you're not actually being paid, because on paper it'll look like you're being paid for work. You just need to clarify that that's not the case and it should not be a problem. The next category, now we're starting to get in a little bit of a trickier situation, and I call these passive income situations. There's a thing called active income and passive income. Active income is where you're working and the work you're doing is generating the income. Passive income is where you're not doing any work, but you have some other investments or things that you own, and you're passively getting that money without having to do any work. Passive income could be things like dividend payments that you're getting from either a family company or other stocks that you may own in different businesses. Another type of passive income would be rental income. So if you own apartments or rent out a room or an apartment in your house, that could be seen as passive income, and as long as you're not managing it. With any income from stocks or from rentals, as long as you're not actively managing the situation to earn the money, so if you're a property manager or you are filling the role of a property manager, then this might be seen as active income and not passive income. So if you're the person managing the apartment, you're dealing with all the tenants, you're signing the leases, you're doing the cleaning or repairs, then you're going to be seen as an active property manager. However, if maybe your spouse is doing it or you're not involved with it at all, or you have a property manager doing it, then it would be seen as a passive income. Same thing with stocks. It's one thing to get just dividend payments from your stocks that you have with, Sun Life, we'll say. If you own Sun Life, they do pay dividends. So you have stocks in the Sun Life insurance company, they pay out dividends. That is a passive income. However, if you are day trading and you're buying and selling stocks actively online at home, even if you're only doing it a little bit here, a little bit there, if you're making a lot of profits doing that, that is going to be seen as active income, both by Revenue Canada and by CPP disability, and it would certainly lead to your benefits being cut off if you're shown to be making more than about $5,000 a year. Now the final one is this family business situation. This is very dicey. You may be involved in a family business, you're getting paid dividends from the family business because you're a shareholder in it, but that causes a lot of red flags because are you actually doing work in the business? And this is just when people have family businesses, you can do all kinds of shady practices rather than putting you on the books as an employee. If you're getting dividend income and it's from a family business, expect everybody to be looking more closely at it, including Revenue Canada. And so you have to be very careful about that and shouldn't do it. Quite frankly, if you're receiving CPP disability, don't be getting paid dividends from a family business if you're actually working in it, because you're going to get yourself into a mess, okay? If you get dividends and you're not able to work in the business and it's all legitimate, you have nothing to worry about. So there you have it. Now you have a better idea of the types of income that can affect your CPP disability payments. The focus here is on whether you are actively working to earn the income or you're just a passive investor who's getting the money from not doing any work. The key here is always, can you do the work? And where you're going to run into trouble is if it's rental income or if it's income from a family business from dividends, or even if sometimes dividends from stocks. Service Canada may look further into it to make sure that you're not actually doing work and that these are true passive investments. So you want to make sure you're in compliance there, and also Revenue Canada will tax you differently based on the real nature of how that income is coming in. So as a general rule though, most of these passive investments are not going to affect your CPP disability, but certainly CPP disability can affect other types of payments like long-term disability, short-term disability, or sometimes even workplace pensions. So keep that in mind. If you like this video, please go ahead and hit the like button, and don't forget to subscribe, hit the bell notification so you'll get a notice every week when we release these videos on Thursdays.